Hi, welcome to the Market Alert for Thursday, the 20th of January 2022. So bonds bullion surges, equity purge escalates, Nasdaq enters correction. Judging by today's dovish shift in December 22 rate expectations, traders are starting to bet on a Fed fold. Not too dissimilar then from January 2018 that I keep barking on about. I don't know how they can actually pull this off without cratering the market, so it's going to be interesting to see if they do go ahead with this in March. Meanwhile, in the UK, inflation hits its highest level for nearly 30 years as rising food bills add to energy bill squeeze. That's going to continue as well. And you only need to look at the Baltic Dry Index for this as well, which let me grab it for you and show you. Okay, so this is the Baltic Dry Index, and as it says down at the bottom here, the Baltic Dry Index takes into account 23 different shipping routes carrying coal, iron ore, grains, and many other commodities. And you can see from the graph here there's been a precipitous drop-off in the amount of goods that are being shipped. And this started in October 4th, and you can see there's been a drastic drop in the shipping of commodities around the globe. This is updated at midday, I do believe, every day, and it shows, like I say, the number of cargo ships that are moving goods around the globe. So it's looking pretty dire, isn't it? And again, we can expect further pressures on supply chains and also on inflation as well. So what was the other news item I had? Oh yes, Biden talking about Putin, saying, my guess he will move in. He has to do something, and that's why gold and silver are moving higher at the moment. Nothing to do with JP Morgan being allowed to move prices higher. It's because fundamentals at the moment and fear are driving prices higher. A lot of people moving into the metals as they do if there is the banging of war drums. What have we got today? The WEF, the World Economic Forum, their fourth day in Davos, sipping champagne and dictating what's going to happen to our future lives by the elite. That's taking place. We've got Philly Fed at 130 unemployment claims, which will be interesting because they spiked up last week to 230. It's that one, but they're forecast to drop down a bit this week. Existing home sales and crude oil inventories, and that will be interesting as well because we had a draw of minus 4.6 last week, minus 2.1 for this week is forecast. And while I'm here, the gold and silver ratio continues to drop as silver moved higher yesterday, but gold moved higher as well, which is why you've got that sort of narrower range than the previous, but still showing red there. 62% retracement of this move at the moment, scenario where it could find support. We've got the main support down here at 73 ounces of silver to gold. Right, let's have a look at the markets and see where we are. Starting off with the Dow yesterday, the market continued to move lower and traded to the 78.89 area, but more importantly the 200 MA with buying pressure coming into the market. We're now currently oversold here, and the market sort of poised to try and move back to the upside. I'm just going to add in some fibs on this particular bar. It should be interesting during today's trade just to see how the market trades back up through the range of this bar, heading back towards that 38, which would tie in as well with an 89% retracement. Failure to do this, and we take out the 200 MA, we've got the 89, and then we've got this low here. And if this low is taken out, then we do have a bit of a problem. And there are more fibs from here projected up to there and back, but I don't want to add too many there. I will add them if the market takes out the 89 during today's session, but at the moment it's looking like they're going to try and bring the market back towards the 5-bar moving average there, particularly that we've got buying pressure in the market there and we're oversold at the moment. In the 30-minute chart, big sell-off late in the afternoon. The market moved lower to begin with, managed to rally back, as you will see from here to here, trading back to 78.89 before reverting back to the red side and then moving sharply lower by 100, 200, 300, 350 points before finding support Meanwhile, overnight prices are managing to trade back up slightly from here down to here and then drawn back, and currently holding at the DP level as well, which is a 62% retracement, so it needs to stay above this level. The 5s cross the 20 as well, but we do need to see prices head towards that 78.89, and if they do, watch out for the 50 bar moving average in this sort of intraday medium term or swing trade market here. We certainly were oversold, and was divergence, crossover in stochastics, and we had some demand as well overnight, and you can see the volume increasing there as prices try to find support at the low, and the low being very important at the moment for all of these markets, because if it keeps getting broken, it puts downside pressure on prices. In the German DAX, again we can see also trading down to the 200 MA, which is also a 50% retracement for the German DAX. Prices coming off the low to close just under the 50 bar moving average last night, but overnight price is starting to move higher. These are the upside targets you want to keep an eye on. We're at the 50% retracement at the moment. Watch out for the 62, which ties in with yesterday's high as well. So if you see in the intraday where you've got the previous day's high, that's also tying in with a 62% retracement in the daily, so adding a bit more resistance to it. And also you've got the 20 bar moving average as well, so there is a cluster in this area of not just the 62 but the previous day's high and the 50 EMA that will need to be taken out, so we need some serious driving through this area. And again, for the next two, should prices continue to move to the upside, you've got the selling that took place on Tuesday as well, and then the 89 as a standard, which obviously ties in very closely to the high there. On the downside, say if we take out the 50%, we've got the low to take out of yesterday's bar, and again if you look at the low, you'll see we're quite away from this at the moment. A lot of support down at yesterday's low as well. You can see the price points that have been dragged from across to prices way across to the left of the chart, showing there is major support down at this low should prices stop. But at the moment we can see they're moving to the upside and stuck at the 200 MA at the moment in the 30-minute chart. Meanwhile, yesterday in the 2-minute chart, you can see that prices found support, and as I said in yesterday's market alert, don't be surprised if they move prices back, and that's precisely what they did, because what they want to do is to wrong foot traders by getting them to go short. You have a heavy day to the downside, and a lot of traders think, well, it's going to continue to move lower, and that's exactly what they want you to do, and then they bring the market back. And not only did they bring it back, but if we look at that 30-minute chart again, it was green all the way for the duration, all the way up until the Dow opened, which you can see there. So the 2-minute chart just driving and moving higher. Then we start to get some problems as the Dow opens. In the pre-market session, this is a classic pattern. You bring the markets up when the cash market opens in New York, the selling comes in. So we had a potential buy signal. It traded up to the scalp, then traded back, but didn't close below the stop there, and then moved back to the upside where we had another signal there. But the first one hadn't actually touched the stop, and given the backdrop of the market, there was a chance that it could move higher, so hung back, and then the market traded up and hit resistance. So not just resistance, but there's 3 lots of resistance there. Well, 2 of price, 1 of BRN, and then we had the short. This one was taken out at break even as the market came back to close above the 5-bar moving average, and the next trade down was stopped out here with a 57% profit on the automatic signals there. Meanwhile, overnight, as we've seen in the 30-minute chart, the DAX is actually moving higher at the moment, and you can see that there is the action. Again, a lot of resistance to the upside. You can see all of these prices that were made, highs that were left behind over to the left of the chart, including the high and the R1 as well. At the moment we're just sitting above the BRN, And we've got the a short-term picture here. We've got the 5 bar above the 20 above the 50, and the 50 above the 200. So we've got quite a bullish scenario average-wise there at the moment. Need a bit of a pullback in the stochastics to an oversold, and then the market would be free to move to the upside. So that's where it's looking at the moment. The futures is about to open. I'm a bit later this morning. Okay, let's have a look at the metals. As we say, yesterday, silver managing to move higher once more. The volume not as great as the previous day, but there didn't seem to be much resistance. We're heading into overbought territory. We may get a run to the 78% retracement in the 200 MA. The last time we hit the 200 MA in silver was at $25. They don't like the market going above $25. As you can see there, it became oversold divergence, and they rammed the market down. It was relentless for weeks. Then we had the bounce and the 62% retracement, and we're now moving to the upside. It depends on whether Putin invades Ukraine or not, on whether we see this move higher. If he backs down, then you'll see the price of silver back down as well at the moment. Gold moved a bit higher yesterday than it did the day before, which is why the gold-silver ratio slowed down somewhat, because there was some impetus to the upside. Again, you've got that situation where the market is heading to 78.89, and when we traded up to this level before at 1876, that sort of area, 1880, the market sold off. Big style, so again, watch out for this. However, if he does invade, then you want to watch the dollar, because it will spike to the upside. That's no big deal for the metals, and shouldn't be, because that was the reason why we saw this move Tuesday, when we saw silver moving higher along with the dollar, because it's classed as a safe haven during times of war. And then crude oil down yesterday, a bit of selling coming into the market there, but changed its tune overnight, staying above the 5 bar moving average, moving to the upside, and fully in tune with what you're seeing in the weekly chart there as well. Okay, that's a bit of a long one today, but a lot to cover, a lot going on at the moment, so I will finish now, and so you can get back to the markets. And as ever, thanks for watching. I'll see you in the next one.